All right, let's get right into it. What if I told you there's a life insurance policy worth up to 7 lakh rupees hidden inside your monthly payslip? A policy that's already active, needs no medical check, no forms, and costs you absolutely nothing. Well, today we're going to pull back the curtain on that hidden safety net.
Go ahead and picture your salary slip. You've probably seen that line item 1,000 times, EPF contribution. But that little line is so much more than just a savings deduction. It's your automatic ticket to a really powerful life insurance scheme. And the best part? The cost to you is zero. I'm going to say that one more time. It costs you nothing.
That's right. If you're contributing to EPF, this benefit is already switched on for you. You didn't have to fill out any forms. You didn't have to go through any medical exams. It's just active, working for you in the background.
So, what is this thing called? Let's give it its official name. It's the Employees Deposit Linked Insurance Scheme, or EDLI for short. You can just think of it as your automatic financial safety net.
Now, to really get where this fits in, think of it like the third pillar of your Social Security. You know the first two, right? There's your EPF for savings and your EPS for your pension down the road. Well, EDLI is the life insurance pillar, and it's been around since 1976, designed specifically to protect the families of us private sector employees.
Okay, so if it's free for you, who's footing the bill? Well, it's pretty simple. You, the employee, contribute absolutely nothing. Your employer, on the other hand, pays a tiny fraction, just 0.5% of your basic salary, and even that is capped at a maximum of 75 rupees a month. It's a really small cost for them, but it provides a massive benefit for your family.
All right, this is the part you've been waiting for. The big question, what is this free insurance actually worth? Let's break down the numbers. So the payout has a really clear structure. For employees who've been working continuously, there's a guaranteed minimum payout of 2.5 lakh rupees. That's the floor. And at the very top, the maximum possible payout is a huge 7 lakh rupees. It creates this solid financial foundation for your family no matter what.
But what if you're new to the workforce? Maybe you've just started a job. You've got less than a year of service under your belt. Are you covered? Yes, you are. You're protected from day one. There's a guaranteed base amount of 50,000 rupees, which means there's a safety net for every single active EPF member, no matter how long they've been on the job.
So how do you get closer to that 7 lakh maximum? It really boils down to two things, your salary and your PF balance. The calculation basically takes a multiple of your average salary and then adds a bonus based on your average PF balance. The takeaway is simple. The longer you work and the more you save, the higher that potential payout gets. Now, this is a fantastic update, especially for anyone who changes jobs. You see, it used to be that even a small gap between jobs could be seen as a break in service and mess with your eligibility. Not anymore. A recent change means that gaps of up to 60 days are now ignored. Your service is treated as continuous and your benefit is protected. It's a game changer. Okay, let's be real. This whole thing sounds almost too good to be true, right? It's automatic, it's free, it's worth a lot of money, which naturally leads to the next question. What's the catch? And you're right to ask, because yes, there is one critical catch. While the insurance itself is automatic, getting the money, the claim payout, is not. And there's a single point of failure that can cause this entire amazing system to just break down for your family right when they need it most. And here it is. The one broken link in the chain is your e-nomination. The vast majority of claim rejections or long delays happen for one reason. The employee's nominee details in the UAN portal are either missing, totally out of date, or just plain wrong. So, what do these roadblocks actually look like in real life? Well, it could be that a nominee was never even put in the system. Or maybe the name in the portal doesn't match the Aadhaar card perfectly. A very common issue. An even bigger one is forgetting to update the nominee after getting married. Or, if you've nominated a minor, not providing the right guardian documents. All of these can stop a claim dead in its tracks. You know, for a family that needs to make a claim, the process is actually pretty straightforward, if that nomination is in place. They just need to gather a few key documents, Form 5I, the death certificate, a canceled check, and then submit it all online. But that online submission, it's only possible if there's a valid e-nomination on file to begin with. Now, once a valid claim is submitted, the EPFO is officially on the clock. They are legally required to settle that claim within 30 days. And if they don't have a good reason for a delay, they have to pay penalty interest at 12% per year. They take it seriously. And, as if all that wasn't enough, here's another incredible benefit.
The entire amount of money your family receives is 100% tax-free. Every single rupee goes directly to them. No taxes, no deductions.
So you see the problem. How do we fix it? How do you make sure this potential issue never affects your family? Well, here is your super simple 3-step action plan, and trust me, it'll only take you a few minutes.
It honestly is this easy. Step 1, log into the EPFO UN member portal. If you've never done it, today's the day. Step 2, verify your details. This is so important. Make sure your name and your date of birth match your Aadhaar card exactly. And finally, step 3, the most crucial one, complete the e-nomination process. Add your dependents, their bank details, and you're done. That's it.
Look, if there is only one thing you take away from our entire chat today, please let it be this. The single most important action you can take to protect your family is to go and complete your e-nomination. Don't put it off, just get it done today.
Okay, but what about a tricky situation? Let's address one final concern. What happens if the worst occurs and your family needs to make a claim, but the company you last worked for has shut down? Who's going to sign the forms?
Don't worry, the system actually has a built-in fail-safe for exactly this scenario. If your last employer isn't around, the claim form can still be attested and verified by a bunch of other authorized officials. We're talking about a gazetted officer, a magistrate, or even the manager of the bank where the account is held. Your family will not be left stuck.
So let's end with this one thought. That payslip you get every month, it holds a lot more than just your salary. It holds a promise to your family that they'll have a financial safety net if the worst should ever happen. So after everything we've talked about today, there's really only one question left to ask yourself. Is your promise secure?